Well, the Reserve Bank has moved to shore up confidence in the economy today, cutting the official cash rate 25 basis points to a 2.5-year low. The Reserve's statement pointed to global risks which threatened the Australian economy. It gave few clues about further rate relief, but economists and business leaders say there's definitely more to come. Here's our finance correspondent, Philip Lasker.
The Reserve Bank is thinking globally and acting locally.
I think it was clearly the international environment that pushed the RBA to move.
Some predicted a second successive 50 basis point cut from the RBA as a decisive response to the rising threat of a global recession and collapsing world equity markets.
RBA cuts 25.
A response to the triple whammy of European turmoil and disappointing economic weakness from the US and China. But the RBA cut 25 basis points, bringing the cash rate to 3.5%.
And we thought a 25-point cut today was appropriate.
It was a smaller cut than the previous month to shore up confidence in what the RBA concluded was an environment with modest domestic growth and a weaker and more uncertain international environment. It wasn't mentioned in the statement, but the RBA might have also had one eye on the federal government's handouts for education expenses and the carbon tax.
Much of the statement was about the weakening global backdrop, the stresses in global credit markets, falls in equity markets, and I think that it was quite strongly worded actually if you look at it. But it's not just about Europe, there is a lot of attention there. But the RBA also pointed out the moderation in China and uncertainty over Asian growth.
It left many with the impression that the global environment would determine Australia's economic fate and interest rate future.
And you have to think that the cash rate is heading back down to at least the historic low of 3%.
Financial markets are betting it'll drop closer to 2%. Certainly business representatives are expecting more.
There certainly was room for further cuts this month and they've made those cuts, and there is room for further cuts in the future, and I think it's important that the bank keep its eye open on the need for future cuts.
Also welcoming the cuts was the housing industry, but it's predicting lower rates and help from the government in the form of more stimulus.
The global environment and the non-resource domestic economy and now some softness in commodity prices will see the Treasurer forced into a position where he'll have to abandon the surplus.
But for now, the focus is on Australia's major lenders and how much they pass on.
This is a benefit that is intended for Australian borrowers. It's certainly not intended to bolster the profitability of Australian banks.
The Bank of Queensland ignored those calls in passing on 20 of the 25 basis point cut. Many savers can also expect a repeat of last month's experience.
It's likely that we'll see that trend again, with depositors having to wear the full cut in official interest rates.
Banks taking a cut. It's one of the few certainties in an uncertain world. Philip Lasker, Late Light.